What's going on, guys? Welcome into today's episode. I've got Steve Haddadin, who is an entrepreneur and the founder of King Real Estate Group, which is a real estate sales brokerage located in Southern California that services commercial and residential real estate investors. He is also a real estate investor himself. He is going through law school and has some unique perspectives specifically on the asset class and business model of gas stations and convenience stores. You know, these are investments that are very niche. And I have seen many families and individuals absolutely crush it with convenience stores. But obviously, there are some nuances to it. There are some, risks that come along with it. And understanding this investment asset type is really important if you want to go into this investment opportunity with eyes wide open and understand everything that is important to know before you take this investment on, being that it's not a passive investment. There were so many things when I first got into hotels thinking, oh, I'm going to make this a passive investment. And when you get in there, you learn and quickly realize there's a lot of hard work here. There is, a lot of blood, sweat, and tears that go into this business model in order to not only have the business thrive, but have the real estate stay insulated and the value inflated and trending in the right direction. And Steve shares his experience and some of the things he's learned from selling them, as well as his family owning them and operating them. So if you're interested in gas stations as a investment vehicle within real estate, this will be a great episode for you. He also talks about kind of his holistic approach and interest in things outside of real estate and outside of his business, in the stock market. We dive into some of the importance around governance and policy and how that impacts real estate. We're seeing this with the LA fires right now, as well as we kind of scratch the surface a little bit on EV and how that can be a value add to potential real estate assets or not, based on some of his experience that he talked about being in the kind of front line and front edge of EV charging stations. So interesting conversation today with Steve Haddadin. Let's go ahead and dive in. Welcome into the show, Steve Haddadin. How we doing, brother?
Great. How about you?
Doing good, man. I mean, I know you're down close to these fires in Los Angeles, so I'm glad to hear that it's not impacting you too much, but I'm sure you are seeing and feeling a lot of the repercussions that are happening in your community and the region as a whole.
Yeah, absolutely. And I actually, not personally, but I know people who've lost it all, and it's sad to hear these stories.
Yeah, absolutely. Well, I'm curious to maybe get your thoughts and perspectives around California real estate and how that's going to, positively or negatively, or maybe not at all impact it from your perspective, but to kind of back up a little bit on how your journey into real estate began. Where did this all start for you?
Oh, it starts actually from when I was as young as 12 years old, and just basically always consistently talking to my father and people around me about me wanting to succeed and build wealth in the future. And most wise people always say real estate. That's one of the first things they'll say. And my father's a pretty wise guy, and he told me that I should consider getting my real estate license when I'm in college and do that in the future, and to whether I want to flip homes or whether I want to buy properties or invest in properties, just real estate's where it's at. That was his message, and that stuck with me. So when I turned 18, that's when it all went from there. So it's just that stuck with me.
Well, I noticed that you were in law school, correct?
I was, yeah.
And so why not pursue a path of law versus what really got you involved as your focus on making a career in real estate began? How did you determine and kind of land and kind of stay the flag in real estate versus going into law?
Interesting. Yeah. Interesting you actually bring that up, because I actually just graduated from law school this September.
Oh, wow.
Yeah, it's very fresh. I wasn't even expecting you to bring it up, but yeah, I just graduated. I'll be taking the bar really soon. And I've always wanted to do this. as well, but I didn't want to make that my main focus. I wanted real estate to be my main focus. Now, I would obviously supplement what I'm doing with legal services, and also helping myself with legal services as well. Knowing the law is very powerful. And ever since I went to law school, my perspective on transactions has changed significantly. And interesting you mentioned that. So, but yeah, I grew up being told I'm a great arguer, I'm a fierce debater, and I negotiate pretty fiercely. So this was in the back of my head as well, but I did this a little later on. If you look at from when I got my bachelor's degree to when I got into law school, there was a 3-year gap, but I was doing real estate since I was a freshman in college. So, it's been 9 years now doing real estate. But that's just another part of the career. At the end of the day, the path all turns to real estate.
Right. Now, we'll dive into kind of your real estate journey a little bit more. You said something that kind of caught my ear a little bit, which was once you got into law school, your perspective around kind of law and legal contracts shifted and changed a little bit in relation to real estate. What does that mean?
So my perspective on risks, and my perspective and the anxiety behind, like, oh, I'm signing something that's legally binding me to something. When you actually learn what things really mean and how getting things in writing makes a whole difference, and making sure you get in writing that to where it's enforceable, and knowing what counts, what doesn't count, and understanding the different areas of law, that changes your perspective. That makes me say, okay, you know what? No, I can do that. I could. I just got to write this in, or I just got to do in different scenarios. It made me more. It's interesting. Most people go to law school and they're more risk averse. Right. I actually increased my risk tolerance. I said, oh, okay, I can try these things now. It makes me more comfortable now.
And that was all based on you understanding the law better and how it applies to real estate, and using legally binding contracts or verbiage, or just understanding the landscape better to achieve whatever goals you're looking to achieve in real estate.
Exactly. Yeah.
That's awesome. Now, take me to kind of what brought you onto the commercial side of real estate. I know a lot of people obviously always find kind of that safe, easy, lower barrier of entry, kind of start with single family, but you've been playing in, the commercial space, working with investors, servicing investors. You own, some commercial real estate yourself. What was it that attracted you to commercial real estate over single family?
So scalability, and I'm not saying commercial real estate's easy by any means in terms of management. But when you have a single door versus you have one complex with multiple things going on within it, I like scaling that way more. There's both ways you can build significant wealth, but for me, I like business. I'm a business-minded kind of guy, and when you get into single family, you start to get a little bit more personal. And it's not that I don't like being personal. It's just I like to be, I'm a business-minded kind of guy. And in commercial real estate, it's more business. It's also, I like the way you scale in that. And I've always known I wanted to own buildings and properties. So commercial real estate's where it's at. Now, I still deal in terms of sales with single family, and when I deal with these investors and whatnot, but my focus is on the commercial side of things.
Yeah, I always tell people commercial is data driven and more logic, and single family oftentimes is very emotionally driven, which obviously I think people can discern, pros and cons on both of those sides. For me, I like numbers. I like whether a math equation makes sense or not. I like being able to mitigate my risk with, logical systems and, kind of operational teams. And oftentimes you can't always get that in single family. And like you said, right, it's much far greater upside on the commercial side, with many of the times the same, if not less, energy and effort and stress that goes into some of these deals. But like you said, right, it's its own beast. It's slow cook in many ways. But if you're patient enough, it's much more fruitful. So I'm curious, with all of the investors that you work with, deals that you've been in and out of over the years, what are the spaces within commercial real estate that maybe you would consider yourself an expert in, or that you naturally gravitate towards and like over others?
Retail, shopping centers, gas stations, that area.
Okay.
Yeah.
And on the retail side, that's one of my asset classes that I own.
What specifically?
Shopping centers. So right now, I've got a couple shopping centers, some neighborhood strips, some redeveloping about a 80,000 square foot shopping center right now that'll, have some national anchors. But that being said, I'm always curious to hear the perspective of why other people like it and what your thoughts are on a retail product as a whole. I know for me personally, I'm very bullish on it. National data and statistics with vacancy, occupancy, shows relatively strong trends and, tailwinds still supporting some of the growth that I think, obviously, we're going to see here in the next few years. But what about retail do you like? And maybe we can dive into, gas stations a little bit as well. I've always kind of shied away from those, but I'm curious to learn a little bit more on that front too.
Oh yeah. Retail, well, first of all, I'm just talking about first the child side, because earlier I talked about how I got into real estate, and then just fast forward to where I'm at now. I've always liked going out, hanging out, shopping, going to restaurants, going to the mall, right? But all that's real estate. All of that entails real estate. And I've always watched tenants come and go, and I've always kind of growing up thought, like, how is this guy surviving in business? I don't see a lot of people coming in and out, and I'm doing math in my head, and what is the rent going for and all that. And that's been something that I've been fascinated with. And as I mentioned earlier, I'm very business minded. So I like the commercial side of, one big box or one big area where there's a lot going on versus the single individual properties. So when you put all that together, that's what retail is in layman terms, right? So, and you said you don't like gas stations. Gas stations is a big part of that. My family, we're also in the convenience store business. So when I put all that put together, I learned a lot, whether it's from my family business or from dabbling in this sphere as a whole and becoming a real estate broker. And I'm very bullish myself on that. We can get into that a little later. But yeah, I'm pretty bullish in that too. And, you're doing the right thing and, doing the construction now and, staying with it. You mentioned earlier patience. Patience is key. Patience is key. And we can talk about some of my experience with the urge of being impatient at the moment, but sticking with it, and how that paid big time in the future.
Yeah.
Future as in today.
Yeah, absolutely. Yeah, I mean, I think, like you said, right, single family in a lot of ways is somewhat, if we're using an analogy, maybe like the financial system, a lot of it is, decentralized. Whereas maybe, underneath one roof, it's more centralized. And, obviously in Bitcoin, in the financial world, that is not, it's almost different than what we look for in commercial, right? We want it all within one ecosystem to create that simplicity, that scale. Hence why I love retail and commercial assets, but also, like you said, from the perspective of, you're creating experiences for people, and there's a lot of different ways that you can monetize that through a commercial asset and serve your community, your customers, and things along those lines. I wrote down on, my notes, gas stations, convenience stores, historically, and I've got a handful of different Indian friends. It seems to be heavily dominated by Indian families, right? And whether, some of my tenants are liquor stores, always run by Indian families, and
I'm Middle Eastern.
Right, Middle Eastern, yes. And they are extremely great operators and great at what they do. From your perspective, just, a little bit of a side question here is why convenience stores? Why gas stations? Why do Middle Eastern families? I also play in the hotel space, and I know a lot of Patels because of that space, and they're great operators. They're great business owners. Curious, why do you think Middle Eastern families and investors love convenience stores, gas stations, hotels? What's your thought around that?
Oh, I could explained that pretty well. Coming from a Middle Eastern guy myself, so, and growing up with an immigrant family, so you're buying yourself a job technically. You're buying, and a lot of them they prefer to buy the real estate too with it. You're
Smart.
buying a job, right? I become the cashier, I become the manager, I become the person who's stocking the shelves. I I find a good buying point. I price it within the market, so or slightly above it to manage my margins. And I am hands on. I'm talking as if I'm one of the operators. Okay. Now, a lot of these immigrants, for lack of better words, are penny pinchers. So what they'll do is they'll get in this operation. They'll say, "Oh, okay, before I bought this property or this operation, it was ran by a guy who hired his own maintenance crew.
Mm-hmm.
I can maintain it myself with my hands. Let me do this. Let me cut these costs." And when they start doing things themselves, you start to see the costs significantly go down, the profits significantly increase because they're involved in every little thing. They're the accountant, they're the maintenance person, they're the cashier, they're everything. So when you start cutting out all that, that's their job. Now I'm this. Now, when they start scaling, that becomes different. Now, if they have kids that are old enough, they start becoming in this location, or other people in their family or trusted people. They start putting them as, okay, now you're the guy here. You're the guy in this city. That's essentially what their success is. Their success is doing what is taught in any business environment or school. Cut your costs. It's very simple to say it, but most people don't want to do the work.
Yeah. It really is such a simple answer, right? I mean, especially in the world of value add real estate, how do you create more value in a business or in an asset? You either drive revenue, you know, reduce or compress costs, and you drive net operating income, whether that's in your business or your asset. And the beautiful thing when it comes to owning commercial real estate and an operating business within it is, one, you can play both sides of that as the tenant and the landlord. That's a whole nother conversation that you can get creative on with how to kind of engineer P&Ls and balance sheets. But the other side of it is, like you just said, right, is, hey, we know that we're going to come in here and be willing to get our hands dirty and, you know, work and grind in this business every day, drive more profit, control our expenses, and ultimately inflate the values of our businesses. And so that makes a ton of sense to me, because a lot of people, right, are always looking for scale and to not roll up their sleeves and get their hands dirty. And from what I'm hearing, you're like, we have no problem with that. And, you know, we have scale because we got big families and we're all willing to work hard.
Yeah. Now, I'm not against finding a way to not get your hands dirty.
Sure, yeah.
But really where it's at is getting your hands dirty. But, you know, which, you know, there's other asset classes like stocks. Stocks, just putting your money to make more money. You know,
Yep.
You're not getting dirty at all there.
Yeah, right. Yeah, and well, and speaking of, you know, I know you own real estate, but you also have, you know, more of a holistic approach and look at diversification outside of just kind of your core tree trunk of real estate investing. What has been your approach and your thoughts around, I generate, you know, wealth and income in the real estate industry, but I'm also looking to, you know, siphon a portion of that disposable income into other investable assets. How have you approached that, being someone that I know for a lot of people, if they're in the industry, they only do real estate and real estate is it, right? If they are in the financial services world, they only do stocks and they only do, you know, kind of the traditional run-of-the-mill retirement investments, and they don't dabble too much in real estate. Why have you subscribed to a more holistic approach, and what does that look like from your perspective?
It's all interconnected. And I'll tell you how I view my portfolio. My portfolio is threefold, really. It's my business, it's my real estate, it's my stock. It's very simple. And each part of my portfolio affects the other. So my business is generating the income, right? Now, your income is the biggest source of wealth building, because what you do with your income, you're either building or you're consuming. And in this country, unfortunately, we become a nation of consumers more now than ever before. Consuming, buying things all the time. And I like buying things too. I mean, I talked earlier, I said I love retail real estate. I grew up liking to shop and go out. But you generate the income from your business. You want to invest that. You buy real estate, you buy stocks, right? Okay. Now, to get your business going, you got to invest money in it, right? So that's also you gotta buy back into the business. So when I'm making my income right now, whatever it's going to be this year or what it was last year, I have this in my hands right now, and some of it's going back to my business, right? I got to go buy more of this, take on more ads, do X, Y, Z, whatever I got to invest in my business. That's, in my perspective, I'm investing. Okay. The other side of the investment is real estate or stocks. Okay. Now with stocks, I'm building my capital up, because when I want to buy real estate, what do you need to buy real estate? You need down payment, you need initial capital. So it's all interconnected, but people, they just view it one way. If you just have a bunch of real estate, what happens when you put up all the money, you buy that property, and you're just relying on the cash flow. See, my stocks have built a nice nest. I'm thinking of buying a property very soon, and I might end up selling some of it. I'm debating borrow against the sell, but that's created another opportunity for me had I just put in a piece of property. So if you look at it in terms of it's one piece, perspective changes completely.
Yeah, absolutely. Now, shifting back a little bit to the gas station business and space. How often do you get new people that are like, ooh, gas stations? I'm interested in buying gas stations. Like, where would one start when it comes to looking at the operating business and the real estate asset of how do gas stations make sense, and how do good real estate investors in gas stations look at and approach deals?
Great question. And the other day, I have to double check whether it was Entrepreneur or Forbes, but they actually posted a video about profitability of gas stations, and they did a pretty good job, except they didn't really do a good job with the cigarettes and the lottery. Gotta say, that's the lowest profit margin in terms of gas stations. But in terms of gas, I cannot talk about that because there's like Sherman antitrust laws that I can't talk about, like margins for that. So, but in general, your income's going to come from inside the store. If you know what margins look like with different items and categories, and you just put it on an Excel sheet and you do the numbers and you boil it down and you look at what is it offered for sale at, or what am I willing to pay for it, and you do the math, right? Now you have kind of like your gross before all expenses, right? Now you as the operator, I talked about earlier, I become the maintenance guy. I become the, manager. When you have your regular expenses as an operator and you attach that to that, now you'll be able to play in the game. But in order to play in the game, you need to understand the business. Like any other business, once you learn the business, that's when you can make a system, and that's when you can scale. So being that I grew up in a family that had convenience stores, I'm able to understand that. But in today's world, we are privileged because we have the internet, and there's a lot of free information. So to that point, when I mentioned the Forbes with Entrepreneur article that I saw with the video, some dude could just pull that up and see that. And now you have the first half of it. It's okay. Revenue minus the cost of goods equals, what the net revenue is prior to all the expenses. Once you have that part, now you got to learn how to operate it. Okay. And operating it, did you ever work in that? Because a lot of times people get into different businesses, whether they apply for a franchise or whatnot, and they'll always say, well, what's your experience in this? How many years have you done that? Have you worked in it? Have you worked for an Indian operator? Have you worked for a Middle Eastern operator? Well, once you work for those guys and you get tired and you learn and you see how it is, you'll be ready for a gas station. It's not an easy business. It's hard work.
Yep.
But that's how one would approach it. Understand the sales side of it, and then understand the operations side of
it. From what I'm hearing, it really makes a lot of sense if you already have scale or economies of scale, or you are willing to be the operator yourself and in the business. Because if you're looking to build a leveraged business model in gas stations, the risk versus the reward may not be as plentiful as many investors may hope to see. Is that accurate?
Yes, but there are people I know of that have 100 to 300 gas stations. And for those, they've created a system where they, like I mentioned with the family member stuff, some of them don't have big families, so they'll have district managers, well compensated ones, but they're responsible for 2 or 3 stores at a time at a specific region. If you build a system to where you can find people that you can trust to teach your system, because if that person decides to leave, I got to do it all over again, or you've got to become that district manager for the time being. So if you reward them enough to want to stay with you, and you scale that way, and you have like Jeff Bezos has his people that he teaches, and he calls them Jeff bots, for lack of better words. If you create your own, like I'm Steve, my Steve bots, even though I don't do that, like how Jeff Bezos does it.
Yep.
And those people are well rewarded and they stay in the company. That's how you can scale in that kind of a business.
Yeah, absolutely. What are the overall kind of net profit margins that people see on gas stations, and for a stabilized quality gas station? What's kind of the general, I know obviously market to market, location to location, probably brand to brand, but what are overall kind of stabilized quality gas stations trading at from a cap rate perspective?
So from the area that I'm in the Riverside County, it's about 6.1% cap as of right now. Obviously cap rates have gone up in recent times.
Yep.
But they will be compressing very soon in my perspective. And gas stations, I mean, market to market, they're very different, right? And price point in terms of gas stations and profitability, I'll talk about that in a second. Gas stations typically go between $4 million all the way up to $6 or even $7 million a pop. That's real estate and business put together, essentially. You have some areas in Northern California or even like desertish area where they're around $2-3 million. I sold one a couple years back for 1.2 up in Kern County area.
Okay.
So area to area, market to market, right? Now profitability. I mean, first of all, who's the owner? Who's the operator?
Right.
I've seen $500,000 for a site. I've seen close to $1 million, if not over $1 million. And I've seen $100,000 to $200,000. It really varies on the market and the operator,
Yeah.
So, but yeah, gas station is a solid asset if you're willing to get dirty and get down and get dirty.
Yeah. What are your thoughts on, I've seen like the Wawas and the Buc-ee's, right? And those brands that have really made almost like the gas the loss leader. And they've been okay with, pinched margins because they know that they're going to get their real ROI on the C-store, products that they're selling. Is that a trend that you can continue to see, gaining momentum and kind of spreading across all gas stations? Are there any other trends or an evolution of the gas station model that you're seeing or paying attention to that smart operators are kind of leaning into and winning because of it?
That is the main model, what you just described. Now you've seen some stores where it's just the store or no store, just the gas.
Yep.
You've seen all kinds of that. There's profit to be made in the gas, but it's nowhere near what's in the store. That's why they're willing to do that, because they want to attract you in. They know when you're filling up gas, you'll be standing there, you'll think, chip sounds good. You walk inside, the Gatorades looks good. The Slim Jims look good. Oh wait, I don't have gum. Let me get some gum too. Oh, you know what? Let me get some lottery, and even though I said lottery is not a big profit margin, and then you just start to, and then you end up walking out with, whatever you spent on gas plus another 50%.
Yep.
That's how it is always. I do that myself. I go into other people's stores and I buy. Hey, that's the name of the game.
Yep. Makes sense. Now, shifting over a little bit towards the kind of government and policy side of things, right? You've heard of, Newsom and his no gas vehicles being sold after 2035. I saw kind of a cool, accomplishment on your bio that You helped develop EV charging station in 2020. It seems like you're very bullish on EV. Curious how policy and governance impacts, that particular asset type in gas stations and the real estate and business side of things, and maybe give us a little bit more of an idea and perspective on, why you started playing in that space a little bit.
Interesting question you have. So I got in because of the grants. And when you say policy, I mean, it's all about the grants. Let me tell you this. It is super expensive to build an EV station. Very expensive. The electrical work and the equipment itself is a lot of money. So if you were to go do it out of pocket right now, it doesn't pencil out for even 100 years of operating it. Doesn't pencil out at all. But, Newsom and different governors or whatnot, they're invested in this and they want to move this environmentally friendly agenda. And, to me, I'm for, helping the environment out. But as we speak right now, there's not enough EV sales to really be worried about gas stations. And I've sat and listened to many economists on the topic. I've been to retail meetings and seminars and conventions, but they're doing it. They're building it around the country. There's the NEVI program in the federal. There's Cali EVIP in the state of California, and I've gotten funds from the state of California. They'll pay up to 75 or 80%. I forgot what it was. I haven't done a station for a year now. I believe it's 75% of the project cost. You just submit what you spend and proof of payment and all that, and they'll review it and they'll send you a check back for whatever you spent. When they do that, now that becomes worth your time. Now, if you own the property, yeah, do it 100%. But if you're going to do that and then lease, I've heard of one operator. I'm curious to see how he's doing now because he put an offer to operate it himself 3-4 years ago when I started during 2020. And I mean, now that you mentioned this topic, I'm going to check on him. But yeah, I actually myself, we own a few car charging stations, and it's fine that the cash flow has gone up a little bit over the last couple of years, and thankfully due to the grants, it's net positive, and it's a cool thing to have on the property. Like, oh, look at this property; it's also got a car charging station, but it's not as what you would imagine, especially being with what Newsom is saying. And by the way, his was an executive order; it wasn't like a law. So, and even if he made it a law, I don't think it would work. Being honest, the numbers don't add. I mean, that's 10 years from now. I don't drive an electric car. Do you drive an electric car?
I do not.
You know how many people I know that drive an electric car? I know maybe 4 people, 5 people personally.
Yeah.
I look at the roads. In certain zip codes, you see more than others, but most areas, I see a bunch of gas cars.
Yep. Yeah, I was just curious if gas station owners were worried about it, right? And
a little bit, but
well, and the way I look at EV, like from your perspective, I'm kind of in the same boat where, if you can get it to pencil and be a net positive, it's kind of going to be one of those loss leaders or at least kind of a net, neutral. Hey, if I've got this on my property, like for example, I'm looking at doing them in at one of my hotels and in a big shopping center. If I say it again,
what cities are hotel in?
This one, Vegas, and the other one, the retail shopping centers in Oklahoma. So they also have grant programs. I know there's national, there's state, there's, kind of local stuff that you can look into all of those. But I know that I'm not going to be, absolutely, raking in dough by having those on my properties. But if I can get more people stopping and patronizing the property and the businesses that are in there, that's a net positive to my tenants, to our overall ecosystem, right? And it gives more of a draw for, people to come there. Hence, that's something that is positive and productive. And if you can find a way that, every dollar you add to your net operating income is obviously a dollar that drives more value into your asset. But like you said on the front end, finding a way to have it make financial sense seems to be a challenge based on what kind of infrastructure requirements your building has and, the site requires. So interesting, stuff there. I'm curious on your thoughts around how, on this topic of policy, of leadership and governance, how the devastating fires, we've seen it just totally upend so many, people's lives, communities, businesses in Los Angeles. I know this is close to home for you. There's a lot of people that are, concerned about the red tape, the policy that's going to prevent people. You got insurance issues. Talk a little bit from your perspective around how you see policy tying into real estate and how you look at that from an investment perspective based on where you're investing. And I guess my root of that question is should people still want to invest in states like California that have policy that may not be conducive to investors protecting their wealth and their assets?
California is an area where property values are just always going to keep going up, and it's because of geographically where it's at. The weather is amazing, and people like visiting here from all over the world. And policy is not good and is not in favor of business owners or landlords. But when you own an asset here, you're going to see a return over the years. Now, income wise, states like Texas, Florida, those states income wise are better, but asset wise, long term, California beats it. When you put the numbers together, because I've done scenarios, because I myself was like, I want to buy in Texas, I want to buy in Florida, and I done the numbers, and I said, well, and I've seen it in terms of the values of the properties I have. So when you stay in a property long enough, and the loan goes down, or you refinance, or whether you're in rentals, the rent goes up, or the cost of, I'm talking about gas stations, the cost of goods start to go up, and then when you do it against what you're selling and what you buy it, and the numbers come down to after the loan, the income at the end of the day goes up with time when inflation does its thing. So when you sit down and you look at all that, California is still a great area to be investing in because of the value of the property going up. Now, in terms of policy, you asked about with burning LA area and in terms of rebuilding, what I can foresee, and this is because we talked about EV stations earlier and expensive infrastructure, I can see them finding a way of putting in infrastructure that can help with building EV stations. I can see that somehow coming into play. And I've read something somewhere online briefly. I mean, there's going to be a lot of reports coming soon where Newsom is working to get multifamily in certain areas that were single family.
Yeah. I know they're talking about upzoning.
Yeah. So that might be attractive to some people, and that might be like, but I still think regardless of what's done in the area that was burnt, that's a hot area. Tourists from all over the world come there. Whatever they do there, it's still going to do very well. Yeah.
Makes sense. So you're still bullish?
Live there, like it. I don't know. You ever heard of NIMBY?
Yeah.
I don't know if they're going to like it.
But overall, you're bullish on CA real estate long term.
Always.
Yep. And, as we wrap up today, would love to get your pulse, your take on the market. Obviously, we've seen what the 10-year Treasury's doing. We've seen where rates, have gone post the Fed pivot and their cut. Seems to be some misalignment there. What are your overall thoughts on the sentiment and results that we're going to see in the real estate landscape and market as a whole in 2025 going forward?
So my take is this: sentiment, everybody's been confused, very confused over the last couple of years.
Yep.
Because they're like, well, we know rates are going to go down. And then every time they did it, they really just kept delaying it. Or when they did it, it went back up. And we have a new administration coming in. And what do new administrations like to do? Have a good 100 days. Their first 100 days, they want to brag. So what I can imagine is this new administration is going to come in. They're going to aggressively push to lower interest rates in the first 100 days. And then they're going to brag, oh, hey, we cut your interest rates. We promised, we delivered, blah, blah, blah. And, you know, that's going to increase, you know, prices. That's going to get people excited to buy again. That's going to move the market a lot. And then what's going to happen after that? Why did they increase the rates in the first place? To slow activity, because things were kind of crazy. People were just buying things and they were like, well, whoa, we need to slow things down a little bit. This is a little too much. I could potentially see that coming back up again. Oh, whoa, everything is crazy again. We need to slow this down again. I can see this kind of going back and forth a little bit again, but we're going to see those rates come down very soon. That's what I can foresee. The stocks have played pretty interestingly recently because they don't know what's going to happen with these rates. But I'm telling you, I can see this new administration either make policy by either bills or executive orders, or find a way, even if it has to do with spending government money to get the rates down. They'll find a way to make rates go down so they can brag. So that's what's going to happen to the market, is things are going to go back up again, like activity-wise. It's slowed down. There's still a lot of demand right now, but there's a lot of people priced out of the market because of the rates. But I can see things ramp up very soon.
Well, I would love to make sure that people know how, if they're interested in investing in Southern California commercial real estate, what's the best place for them to connect with and reach out to you?
You can go to my website, stevehaddadin.com. You can find my socials at Steve Haddadin. Just reach out and I will respond.
Thanks for coming on the show, Steve.
No problem. Good to be here.